So the Federal Reserve is keen on raising rates. Not so soon, of course, very keen, but not now. And we're talking about December after the US elections. But they did make it clear that the case is strengthening, that they're more eager to do so. That means that the bar is low for a hike. That means that if we have job gains of only 150,000, that should be good enough. Okay? In the past, we were always talking about 200,000, but as the US nears full employment, 150 is good enough. We should see more wage pressure, and of course, this full employment is a bit of an illusion. Anyway, last time it was 151, so it shouldn't be too hard to reach that. Wage growth was quite disappointing last time. More or less within range. It didn't accelerate, not what you expect when the economy nears full employment. So last time it was 2.4. 2.5 again should be good enough. We don't need to see 3%. What is expected for the non-farm payrolls this time? A job gain of 171,000, so a bit above that low bar, but under the 200,000 we got used to. Last minute expectations will be shaped by the ADP and ISM on Wednesday. Too much impact, but in the past few months, these figures came more or less as expected, and they didn't have an impact. Last time we had the ISM after the non-farm payrolls, so it didn't impact at all, naturally. But beforehand, both figures did not make a splash. Okay, wages expected 0.2 month over month and a rise to 2.6% year over year. The unemployment rate, currently at 4.9% in the United States, but as all market participants know, the unemployment rate depends on the participation rate. So if we have a rise in the unemployment rate, but also a rise in the participation rate, it's meaningless, okay, for markets. But politicians do care. If we have a rise in the unemployment rate, it serves Donald Trump. If we have a drop in the unemployment rate, it serves Hillary Clinton. Remember that it's not that important for markets. We need the number of jobs gained and wages. Okay? All in all, the US dollar looks relatively strong. So not much is needed in the current I mean, the bar is low also for further dollar gains. Again, it's mixed between different currencies, but for the current momentum to continue, we need an okay report. Okay, we need a disaster report, let's say under 100,000 jobs gained and wages falling closer to 2% to really shock markets. Okay, I would say that the outcome this time depends equally on the headline and on wages. Okay, these are the main things. We had a shift towards wages during many months, and now it's back. I would say it's equal. We're not back to the headline, but not otherwise. Okay, so that was our non-farm payrolls